is we don't have any real clue as to where to get on, where to get out. So we need some help from software, and that's where I use Vantage Point to do that. I need to make clear, right up front that I am not a Vantage Point salesman. I don't get any money for or promoting Vantage Point. I don't sell any product. I don't receive any money for product sold. I'm just interested in developing trading strategies and trying to come up with some things that will work for trading my own account. Now, Vantage Point is one of those tools that I think has worked very well. A couple of things you need to know about Vantage Point. It is based upon inter-market analysis, which makes a lot of sense that markets influence each other. A neural network process determines the 25 markets that have the most influence on the target market and then reflects the degree of that influence in a set of inter-market data that is used by Vantage Point. The Vantage Point predictive indicators that are produced mostly use typical prices, which is the average of the high, the low, and the close. I know when you look at most analytical software, you're looking at a kind of a CAN thing where you have various indicators, and they're all based on one price per day. Typically, that price per day is going to be the close. But with Vantage Point, we're using all of the possible data that we can possibly use during the day, because that is more indicative of what is going on, what is underlying the market and making it move. Now we're going to start way back over here. We're going to start with several stocks and just run through, kind of a quick run through as to what we're going to look at here and kind of talk about them. We're not going to go into any detail until we get to a stock later, but the decision that you have right now, of course, this is a one-year chart. We're going to look at one-year charts for various ones. I'm only going to look at the stocks that I consider to be the leaders in terms of being a blue chip type of stock. They are, stocks that are going to be around for a while. They're not the kind that are going to have, so much of a boom and bust type thing like we saw in the tech bubble, a few years ago. I'm looking more interested right now in stocks that are paying dividends. I think that the appreciation in stock value is going to be a little bit hard to come by in the near future because of what is kind of overlaying the market. I'm looking for a stock, or if you're looking for a stock and you're analyzing the fundamentals, you want, of course, good earnings. You want a situation with low debt. You want a company with good management. You want a company that has future prospects. The products that they're making, it's like an Apple. They keep coming up with new type of products, and that keeps making them a dynamic company and a dynamic stock to hold. Not all stocks are that way, but that's the kind of thing you're looking for. So we're just going to kind of run through a few of these to indicate, where we're at on the hard right edge. Walmart, of course, was a big run-up after everything kind of turned south. Everybody said everybody's going to go to the cheaper alternative, which Walmart was able to grow until it, too, came into April and then started to go down until, we've lost about 10% of that stock. McDonald's, kind of a similar story. It's kind of a low-price place to eat. You can always afford a Big Mac. There's Happy Meals to be had and so forth, and it has done very well on that hard right edge. Now it, of course, looks like it could be in the position where it could turn down. We had a high near 72, then we dropped down below 70. If it drops below that interim low that you see there at 66, 65, in that neighborhood there, could be the end of that particular move. But we're not going to try to forecast that based on anything, at this point. Procter & Gamble has this weird long thing that you'll see there on May 6th. It is a solid stock to hold for the longer term. May 6th was an aberration, so we won't deal with that a whole lot either. Johnson & Johnson's another stock in a similar category. It has dropped for whatever reason. It's a bit of a surprise, but it's a favorite institutional holding. But it has dropped recently. So now the question always comes when you're looking at that hard right edge, should you buy the dips, or are you in a situation like with the Hershey type situation where it has been trending up for most of 2010 and is moving up, and this looks like a stock where you add on as it moves to new highs. The old theory, you buy high, buy higher, that type of thing where the market is moving up. Now, one of my favorite sectors that I like to look at in terms of the whole, if I'm looking at sectors, is in the area of agriculture. As you know, there's probably kind of a promising situation for a lot of agriculture, depending on what happens with the world economy. A lot of things going on in the whole agricultural sector, but some of the stocks have been hurt. As the markets drop down, you have stocks like Monsanto, for example, with Monsanto dropping all the way down into 50. It's about chopped almost by like 2/3 or something of what it was at one time. Part of that is over some issues that have been raised regarding some of the what it has done, in terms of protecting the what they call the soybean seeds, the Roundup Ready types of seeds, and some of the various patents that it holds, and the possibility that those may, because of trust busting types of things, may change. So Monsanto is a stock to me that looks like a good longer term situation, maybe not so good looking at the very near future, but it looks to me like a stock where you put a stop in the vicinity right above that little sideways action that we have now, potentially has a very good move. Of course, you always have the other side of the coin. You have John Deere has moved up strongly. I like the John Deere stock as being the leader in the farm machinery business. Related to that, Caterpillar in the construction business. As you can see on the hard right edge, all of these stocks have had a tough May, except for, with the exception of a few like Hershey. It's been kind of a rough stretch that they've gone through, and in some cases, having a tough spell is always good. And then there are the stories, of course, that you have heard about some stocks that once they have some really bad news come out, they get totally beaten down, and maybe that's the time to buy when they're really down and out, when everybody's kind of giving them up for dead. That's the one you want to jump on, and that would be the case with Toyota after the issue that they had about runaway cars and that kind of a thing. So Toyota is similar in that it has dropped to a low and has the potential to move on up as the market moves up. You also have other stocks. You have Intel, kind of one of those old standards, but as you can see, relatively small movement. If you're betting a lot on Intel, you're going to have to bet on things like the dividends or something to make some income, because in terms of actual appreciation, it's nothing like an Apple in terms of big moves. Another favorite area that I like is the area of all of the minerals, especially those that are related to the mining industry, like gold,